I'm Lee McDonald with the AM Best Company, and I'm joined today by Lori Chortis of Best Review Magazine. And we both welcome you to the Insurance Marketing and Advertising Summit Lunchcast series. These are the presentations that have been prepared for our annual IMAS conference, which unfortunately was interrupted this year by Hurricane Sandy. So we're presenting these sessions for public viewing. We'll be reporting them in detail in Best Review Magazine, and of course posting them for playback as video. I'll turn it over to Lori right now.
Thanks, Lee. Our presentation today features two gentlemen who are well known in the insurance industry for their creativity and communication skills. And they're both focused on innovation, and they hold titles that include that word, which has become somewhat of a rarity in any industry today. Ty Sagalow is president of Innovation Insurance Group, and he's a veteran of Zurich and AIG. Ty, welcome. Thanks for joining us today.
Thank you for inviting me.
Ty, of course, and I'm going to set up his presentation here. Ty Sagalow, welcome, and the presentation is yours.
Thank you very much, and thank you, Lee, and AM Best for inviting me to talk today about a subject matter very close to my heart, innovation and innovation in the insurance industry. We're going to be talking about a number of topics today. What is innovation? Why innovate anyway? If you're going to innovate, who's in charge? Should you have a chief innovation officer? Should you have a new product development department? Advantages, disadvantages. And what does this have to do with insurance? Did the insurance industry, in fact, ever innovate? If so, are they innovating today? If so, by whom? And then finally, what happens tomorrow? And what happens if we fail to innovate? Then we're going to look at a couple of interesting innovations that are going on today. And finally, we'll conclude with Ty's top 10 do's and don'ts for innovation in insurance. But let's begin with what is innovation?
Oh, wait, I'm sorry, I know what. Try now.
Okay. Many people believe that innovation is illustrated by this. There is a mother hen looking at all the ideas represented by the eggs. And you concentrate on the ideas, and you look inwardly, and you determine which of the ideas you're going to foster and which you're going to pay attention to. And it's sort of an inward examination. But on the other hand, perhaps innovation is this, illustrated by a newborn baby, not looking inward, but instead looking outward into the world, taking in every element of the world and looking at it with literally newborn eyes. It is this speaker's humble opinion that innovation is the latter. For those of you that have gone to Disney World with your children and seen them as they looked at Mickey and Minnie and all the other characters and take in their wonder that they are looking at the world anew. If we are to innovate, whether it's in the insurance industry or any other industry, we must look at the world with the eyes of a newborn baby. So, our next question is, well, why do that? Why innovate? And the most common answer, and in fact still the most fundamentally true answer, is that if you don't solve problems better than the next guy, if everyone solves the problems of your clients, of your customers, in the exact same way, then your margins will be reduced and everything becomes a commodity. We have seen this over and over again in the insurance industry. And yet, if you solve the problems of your clients, and you do it in a unique way, and better than everyone else, then there is no competition. There is no A versus B. There is simply A versus nothing. But not everyone, of course, has always believed this. An alternative philosophy we hear very often is, well, everything worthwhile has already been invented. Now, this has been attributed falsely to a number of heads of the chiefs of the patent offices. But the closest statement really came from Henry Ellsworth in 1843. Now, Henry was the chief of the U.S. Patent Office, and he was testifying in front of Congress. And he was commenting on the rush of technological advances that were so happening in the mid-19th century. And he said that this rush of technology development forecasts a arrival of that period of time when human development will end. Well, fortunately, human development did not end in 1843, and I don't think it's ending today. And yet there are those that say that, well, innovation is really just being a fast follower. Why be the leader? Leaders take chances. They fail sometimes. They spend a lot of money and the product ends up going nowhere. No, it is best to watch, what some carriers call the watchful waiting type of philosophy. They watch the marketplace and they look to see what products are successful and not successful. And those that are successful, they will jump on, probably have to cut prices, and try to take market share. I believe that to be a legitimate philosophy. However, I do not believe that to be the philosophy of innovation, which will maximize growth and maximize profits. If you are first to market, the first to solve a customer's real needs, then you command the show with pricing, terms, and conditions. And so I'm more of the philosophy of innovate or die. And although a lot of people attribute this to Bill Gates, it was actually first said in 1997 by Darwin in his book Innovate or Die on the Net. And many statistics show that half of all products and half of all profitable growth by the largest of companies is from products that didn't exist 10 years earlier. So don't be afraid of failure. Failure is not an option. It's just simply not the rule. Instead, what the rule is embrace failure. What Clay Christensen of the Harvard Business Review said, smart failure. In a little while, we're going to be seeing a 1-minute video clip from legendary great Hank Greenberg, who talks about this concept. All right, so let's say innovation is a good idea. Our next question is, what does this have to do with insurance? And has insurance ever innovated in the past? And the answer is yes. If you simply look at the last 30 years, and we can obviously go way back to the first auto insurance that actually came into existence before Henry Ford made the Model T so efficient. But if we look just at the last 30 years, on a product point of view, we have directors and officers liability insurance, 1979, now a multi-billion dollar industry. ERISA insurance, environmental insurance, Y2K insurance, over the last 10 years, cyber insurance, and a new product that's making its way around in the last 2 years or so called reputation insurance. But the other thing to remember about innovation in the insurance industry is that it doesn't have to be product. One carrier, in fact, calls their product development department their proposition development department. And I think that makes a lot of sense. Because it really is a proposition, a value proposition, if you will. And every touch point that you have with your client, whether it's product, service, claims, pricing, is an opportunity to innovate. So in addition to product, we've seen innovation in other areas like distribution. Whether it's the airport ATMs, outside the United States, they sell insurance at 7-Elevens, micro-insurance, selling insurance through fertilizer companies, for example, in Africa. And of course, the biggest new distribution channel for insurance, the internet. On a service perspective, we've seen risk engineers going from advisors to the underwriters to being part of a sales force, understanding that their ultimate goal is to lower the cost of risk to the customer. CAL is not an animal, it stands for control of well, and it's a way of helping oil companies lower the risk of disasters. Remote printing and using PDFs as a way of issuing policies have vastly increased the efficiency and lowered the cost of policy issuance. Innovation can also take place from a structural point of view, an organizational point of view. Claims and underwriters are now frequently co-located within organizations. That is to say, simply moving chairs resulted in better service to the customers. And now, the creation of practice groups and practice leaders throughout the insurance industry on various types of industries and sub-industries.
Restaurant.com certificate for many, many years.
So, if the industry has innovated in the past, how do you go about doing that? When do you innovate? Who does the innovation? And how does that innovation take place? Well, the simple answer is you innovate every day. Every day is an opportunity to talk to the client, talk to your customer, and determine what their needs are. And remember, we're talking about the needs of customers, not their wants. Henry Ford once said that if he listened to what his customers wanted, he would have built a smaller, faster horse. Instead, he listened to what they needed, was the ability to go from point A to point B faster. And he decided that to do that, he had to invent something different, a horseless carriage. So, who innovates? Well, we say we're starting from the top. The best companies, and Matt Power, another speaker today, is from one of the best innovative companies in the insurance industry, and it starts from the top. Well, what type of structure do you need? Do you need a chief innovation officer? Do you need a product development department? Well, for those companies that can afford it, there are many, many advantages to having someone as a chief innovation officer and having a department whose sole job is to create new products. In the past, companies like AIG, Zurich, ACE, and others have had departments, and they've been as large as 25 or 30 people. At one point, that department at AIG, for example, was issuing a new product somewhere around the world every 2 weeks. But if you're a smaller company, you can still innovate.
I miss those.
You can have it as either a single person as a chief innovation officer or a shared task, but also use outsourcing, consultants, and outside companies that can help you keep the ball moving.
The $5 for $25.
But in a fundamental sense, it's not just the job of the CEO or the chief innovation officer to innovate. It's everyone's job. Everyone should be focused on the needs of the customer and doing a job of meeting those needs better than the next guy. Now, one remembers that in 1969, a reporter in NASA was walking down the hallway and saw a janitor and asked that individual, "What is your job?" Janitor stopped mopping the floor, looked in the eyes of the reporter, and said, "My job is to get a man on the moon." And it's a wonderful story.
Right, I know, I saw that on the card.
Because it shows that companies that innovate, the job of innovation, the job of thinking about new solutions, better solutions, is everyone's job.
That's what your standard pricing is.
So how do you do that? Well, you create a culture of innovation. You hire the people who think out of the box, who are customer-focused, that are result-ended. You can have an innovation department, big one, small one. You can outsource, you can hire consultants.
All right, now
but the most important thing is developing the internal culture. And then you have to have a process. There are a lot of efficient processes for product development. There are outside books written on that subject. One is posted on my website that it's free to download. And then finally, you reward and don't punish. And it goes back to this idea of a smart failure. Failing is not a problem. It is a process.
All right, so that's
leading eventually to success.
Right, so that's $2,000.
Edison once said
So
when he was asked,
yeah, so
how
I'm
did you
probably,
feel about
it's interesting.
the failure
I
of
mean, the logo was
developing
intriguing,
the
but
light bulb
not
1,000 times? You
$2,000
tried
worth
and you
of
failed
drinking.
over and over and over again. And he said, I didn't fail 1,000 times. I successfully found 1,000 ways not to develop a light bulb. Again, additional resources are available. They are free in many, many sources. One happens to be on my firm's website, www.innovationinsuranceGroup.com/innovation.html. You'll find many documents there. You'll find videos there and a number of resources that are free to download. So with that in mind, let's look at the future. Ty's top 5 innovations of the future. The first, and we'll be talking a little about this in the next couple of slides, is reputation insurance.
You know, I mean, how does
There
that,
is no, when we're talking about here,
what
corporate
type of paper
reputation
is it on?
insurance. There is no doubt that the value of a company's brand, a value of their reputation, is their most important asset.
Yeah.
And yet,
And
historically,
I
the
guess I can
insurance
always
industry
reprint it
has
on
done
heaviest stock
very,
paper.
very little in helping protect that asset. Yeah, there are some endorsements around, and I've wrote most of them, that give $50, $100, maybe $250,000 of insurance for crisis management. But that really doesn't solve the problem. So over the last couple of years, the industry has
that would
responded,
be the more logical way
and
to do it.
responded
You don't want to
boldly
hand something out
with a
on
number
regular,
of
you know,
top-notch,
computer
standalone
paper,
reputation
printed
insurance
paper.
policies. The next part of risk that the insurance industry historically has not done a great job on is intellectual property. There has been from time to time insurance policies focused on intellectual property insurance, mostly involving litigation, either defending suits for patent infringement or helping prosecute suits for
Well,
patent
show me
infringement.
the
and those
copy
policies are
of,
still
send
out
me
there. But
a sample of what the
the
certificate looks
issue
like.
of intellectual property
So, all right. So,
as an
unfortunately,
asset,
I'm coming to the end of this. I'm
and
going to actually pay
insuring that
attention.
asset,
But you
industry
sent
has
me an
not done a very
email.
good
You're going
job
to send
on.
me a sample
Well,
certificate.
that's
I'll
about to
probably
change.
do the $200 bit.
And
I just got to figure
as
out
I
whether I
begin
want
to
to
talk
do a
about
card,
next
which
year,
doesn't have
I
my logo
expect
on it, but
a
it's
major
cards, so it's like
new
heavy and
insurance
substantive,
policy
or a
insuring
certificate that has
intellectual
my logo
property
on it with maybe a
as an
phrase,
asset.
you know, thank you for your business or something like
Finally,
that.
supply chain. Again, we'll be looking, I think, in the next couple of years to better and
Okay,
better
send me
policies on
a
supply
sample and I'll
chain.
make a decision.
There are a couple out today, but they're really not catching on for various reasons, and there's really nothing really good for the middle market. Climate change litigation is something that within the next 2 to 4 years is going to be a major additional casualty risk. There are no policies now that really focus on and cover the liability
All right,
that
terrific. I
is
look
working
forward
its
to
way
it.
through
Take
the
care.
court system for climate change. There are pollution exclusions that prevent this from being covered under traditional policies. And there is no doubt, at least in my mind, that over the next 2 to 5 years, we're going to have a major increase in climate change liability and that the insurance industry will have to respond. And then finally, as Mike McGavitt indicated, not enough folks are buying cyber insurance. And there's a whole bunch of reasons for that, partly because of lack of awareness on the demand side, partly because there are certain aspects of cyber insurance that are difficult for the industry to cover, and many of us are having dialogues with the federal government to help solve that problem, and I'm confident in the next 1 to 3 years there will be additional assistance from the public sector in a way that's appropriate. But all in all, the cyber insurance policies will continue to grow, they'll continue to get better, and they'll be a larger part of the market. However, that is not to say that the policies that exist today aren't quite good. In fact, many of them are truly excellent, and that if you have not looked at the need to buy cyber insurance within your industry and within your company, I would strongly encourage you to do so. And if you are publicly traded, I would ask you to go on the SEC website or my firm's website and download a October 2011 guidance report from the Securities and Exchange Commission, essentially saying that every publicly traded company needs to disclose if network security is material, and frankly, it's always material, 6 items. And the 6th item is, do you buy cyber insurance? And if so, why not? You don't have to buy cyber insurance, according to the Securities and Exchange Commission, but you have to at least say you knowingly made that decision. So if you're publicly traded and you haven't knowingly made a decision whether or not to buy cyber insurance, I suggest you download that Securities and Exchange Guides report available from the SEC.gov and also available from my firm's website. Finally, we'll end with Ty's top 10 do's and don'ts for innovation in insurance. Do number 1, innovate every day. If you ever find yourself saying the following, one day we should look at, you're in trouble. Because that one day that you should look at, digitizing photos, traveling by air, selling insurance over the internet. If you find yourself saying, one day we should look at, I assure you, my friend, that day is today. Do start from the top. Innovation comes from the CEO, comes from the COO, and works its way down. Do create the right culture, hire the right people, and create an efficient process. Do create a dedicated team if you can afford it. If you can't, try to create a dedicated individual within your organization. And if you need to, don't be afraid to ask for outside help. They could be useful. The top 5 don'ts. Don't discourage stupid ideas. There aren't any stupid ideas. There are just ideas that have not yet become successful. Every idea leads to another, leads to another. And in a similar vein, don't punish failures. In fact, embrace failures. Embrace Clay Christensen's idea of smart failure. Again, as I said in our number 1 do, the corollary is a don't. Don't think now is not the time to innovate. It is always the time to innovate. It is always a time to look at your customers, ask them what their needs are, and find a way to solve them better than the next guy. In a similar way, don't get hung up with the word innovate. When I was at a major carrier, first year we did a survey of all of our customers. We asked them 25 things that they would like us to do and what things they were not important for them for us to do. And we had 2 questions on innovation. Do you want us to be innovative? Do you want us to innovate? Those got on the bottom of the list. Now, as the Chief Innovation Officer, I was actually quite worried about that, until I realized that maybe the problem was the word innovate. So the following year, we did our survey, and we asked the same question, but we phrased it differently. What we said was, do you want us to solve your needs in a way better than everyone else? And that became their number 1 desire of the 25. And then 10, because one must always have 10, and it's worth repeating, don't ever hear yourself say, one day we really should. Well, that concludes my piece. I'd like to turn it back over to Lee for your closing comments. And again, thank you so much for inviting me.
Thank you, Ty, and thank you, Matt. Excellent presentations. We just had about time for one quick question. I know Lori had. Did you have a question that we'd received? Or?
Well, we did talk a little bit about that, but when you look at technology, I'm curious what kind of role technology really plays in innovation. How does technology really factor in?
And I want to highlight 2 of the new products that you mentioned, and they're not so new, but they continually evolve, which is telematics, the ability to pay, well, most of the time it's auto insurance, both on a personal lines basis and a commercial lines basis for the actual risk. There are many good products in telematics out in the industry. I believe that it is the way in which insurance in the auto industry, whether it's personal lines or commercial lines, will go. The second product mentioned, Pay As You Go, also has a connection to not just auto, but also workers' comp. And this is a very, very important product where technology is used so that you do not pay your workers' comp premium all at once, but instead you pay it on every paycheck based upon the exact number of employees that you have on that paycheck. Now, there's only a couple carriers now that are offering pay-as-you-go, Hartford being the largest. However, in my opinion, if you are a middle market company, the best way of paying for your workers' comp insurance is pay-as-you-go. And if you are a carrier with any sort of workers' comp department and book of business, if you don't have pay-as-you-go as a means of having your clients pay for the workers' comp premium, I recommend that you strongly look at it.
Okay, well, thank you, Ty. Thank you, Matt Power. And thank you, Lori. And thank you to everybody who has helped us with the IMAS conference series. It's a little different this year. Next week, we'll be back with a presentation from Richard Augustine. He's founder and CEO of NIP Group. We'll be speaking on profiting from niches, identifying and pursuing program opportunities with limited resources. If you'd like any more information about the series, it's at ambestcom/conferences/imas.html. We will have full coverage of this online and a large package throughout the first several months of 2013 as we move forward with this material. I'm Lee McDonald with the AM Best Company. Thank you for joining us.